Good day, ladies and gentlemen. It's Eric Coffin. I'm here today with Ralph Shearing. He's the CEO of Altaley Mining, high-grade mining, translated to English. Hopefully that's the case. Ralph and I are going to talk about the Q2 financials that came out yesterday, which were quite good. But really the real thrust of this conversation is going to be about what's going to be happening at both mine sites over the next, say, 3, 6, 9 months. There's a lot of stuff going on that could, things have improved a lot, but there's things going on that can improve them a lot more in the next 3 to 9 months. I think there's some really good quarters ahead for the company, and I want Ralph to walk us through what the plans are. So do you want to just talk a little bit about the financials and maybe where things stand right now?
Sure. Yeah, talking about the company and our financial statements, we just announced a really good quarter. I mean, we've had Q1 was good, Q2 has been better, and we've been able to really get Campo Morado producing and making good money. So what I could do is just quickly chat about it a little bit, I guess. So, we've been able to bring our C1 cash costs for the Q down to 48 cents per pound of zinc produced. Q1 was 60 cents. So, and before that last year, we were up in the 80s to the dollars. So how we've done that is being more efficient on the project, been able to increase our recoveries slightly on the precious metals, which has helped, obviously, and just streamlining the project. Obviously, metal prices have increased, and that's really helped us as well. But all of those things combined have given us a pretty good Q, and we expect to be able to continue that throughout the rest of this year. So looking at the concentrate produced, we had 11,800 tons of zinc concentrate in Q2, and that's a slight increase from before. And we get into gross or mine operating profit, or net profit, if you want to call it, $9 million Canadian. And over the year, from 6 months' time, it's 14 million Canadian. So this is money that we're using to provide some of the expansion of our tailings facility. Behind me, you can see the tailings, we've expanded that. We're also paying back quite a bit of debt that we accumulated on the project in 2018-19, which were pretty tough years. So we expect that if the project continues to produce as it has over the last 6 months, that we should get this project back in the black. In other words, have all the debt paid off towards the end of this year. And that's if metal prices maintain and we continue to get the efficiencies that we have been achieving. So if you look at what we earned on a share basis for Q2, it was 3 cents a share. Overall, through this year, we've earned 5 cents basic earnings per share, 5 cents. And that is, it's a very good feat for our company. We've never done that before. So this should give investors some pretty good comfort in that the project, Campo Morado, is on track. It's producing well. Campo Morado has been a project that's had a bit of a bad name in its history. It's been a tough mine to produce from, tough mine to make money at. And, we've been able to turn it around, and not solely because of metal prices, but they've certainly helped, but because of some really good efficiencies and a very good mine manager that we've hired on site who's doing an incredibly good job for us.
One thing I'm going to touch on for those of you that aren't familiar with the company, if you look at the Q2 financials, I just want to point out that the balance sheet today actually looks much, much better than it did at the end of June 30th. And the reason for that is there were several, there was a big finance package for Tahuehueto, but it also, in conjunction with that, there was renegotiation of several, like Ralph mentioned, a whole bunch of debt got built up in 2018 and 2019. A lot of that was on the current part of the balance sheet. If you look at current liabilities, June 30th, most of that's actually moved to long-term because of these renegotiations and stretching out the payments and getting better deals from both of the major lenders. And so, I mean, essentially the working capital position is way better right now than it looks like at June 30th. It's a much stronger balance sheet. I think your cash is still climbing because you're still making money, right?
Yeah, I mean, the cash is I wouldn't say it's climbing necessarily, because the cash we're making at Campo Morado is servicing debt. So we're
Right.
not, we've got some of it in our bank account, but it's going out to service debt and pay off for the expansions on the tailings facility. That's paid now. But maybe if I share a couple of slides here, it'll give your viewers a little bit better understanding of it. This is our cash balance as of August 24th. And you see up in Canada, this is from the private placements and some of the findings from Empress, but we have around $3.5 million from combined US figures. And then over in Campo Morado, decent money here. It's $3 million in US and pesos. Again, this is going quickly out the door to pay for debt, but it's a good position for us to be in. And then down in Real de la Bufa, which is the Tahuehueto owner, we have decent amount of cash there, total of 3.8 million Canadian plus pesos and US dollars. That money is available for the project at Tahuehueto. We still have another $5 million to draw down from the Hacienda Banco to complete the construction at Tahuehueto, but I'll get into that in a minute. What I'd like to show next is our loan debt status. You were talking about the company taking a lot of debt from short term. So the reason it was in short term is we defaulted on the loans with Nearstar, with Trafigura back in 2018-19, but we were able to negotiate our way out of that with Nearstar and Trafi, and they have been really good with us. Obviously, not happy that we defaulted, but they've certainly allowed us to bring in the overall plan to get this company back on its feet, and allowed us to operate and negotiated extension to all the agreements. And this is a summary of those extensions. You can see, Nearstar, our balance was 8.5 million in Q2. Escarofin is our major shareholder. We owe him $3.5 million. Trafigura is $15 million. That's both of the projects. And then Trafigura and Campo Morado, $4 million. So all of those were renegotiated and taken out of the short-term debt and put into long-term debt under these terms over here. So we're basically paying these debts down over the next 3 years. In the case of Nearstar, it's 2 point some years. Trafi's 3 years at Tahuehueto, 2 and some odd years at Campo Morado. And then we even renegotiated with our major shareholder. So that has put us in a pretty good position. Made the balance sheet a lot better, moving that debt into long term. So that's how it's all cleaned up, and we've got the pathway forward to pay this debt down. And we have based all our cash flow modeling to pay this debt down solely from Tahuehueto. We have not put any of the potential profit in Campo Morado to pay this debt down, other than servicing the debt out of the cash flows for the interest payments to Nearstar and Trafi for the debt at Campo Morado. So Campo Morado, if it continues to produce well, it's going to help us pay this down quicker than just us relying on the Tahuehueto project to produce and pay the debt. Okay.
And at Campo, you're not resting on your laurels. I mean, you guys have done a great job of bringing costs down and obviously bringing profits up. But you've got some pretty interesting stuff planned. You and I talked just before I hit the record button, and there's actually a couple of things going on I didn't know about until today that sound pretty interesting and positive.
Yeah, well, I can comment on that too. So, one of the issues in Campo Morado is the metallurgy of the deposits there, right. And they're difficult. They're sort of refractory on the precious metal side of it. So, last year we were getting 15% gold recoveries and 30 to 40% silver recoveries. We have been able to move that up to 20 to 25% gold recoveries, and there's days it falls down to 15 again, but generally we've moved it up 5% plus or minus on the gold recoveries. On the silver recovery, same thing. We're up probably plus or minus 10%. So we're now in the neighborhood of 40 to 50% recoveries on the silver, just from the operations, guys on site improving the operations. But what we've doing, and I term this as a full court press on metallurgy. So we are really working on trying to solve those issues, both of potentially increasing base metal recoveries, as well as increasing precious metal recoveries. And what we've got right now, a pilot plant on site from Mealbin Mineral Services. It's a pneumatic flotation pilot plant that's designed to recover very fine-grained or fine-ground ore. And so that pilot plant testing just started. We've gone through the first phase. Unfortunately, we had a breakdown on the plant, but that's just getting back up and running now. Delayed us probably 2 to 3 weeks, but we're moving into the second phase of that testing. There's about 5 streams we want to test, including the tailings, to see if we can recover there. But we hope to be able to increase base metal recoveries, but also take the tailings, either a pyrite concentrate or the tailings, and do a forced oxidation and a leaching of those to recover a lot more gold. And this system has been tested. It's called a leach ox process. It was tested on the project back when Nearstar owned the mine. And they were able to increase their gold recoveries by 400%, taking up to 60% recoveries from the ore body they were mining. And they just tested the most distal ore body, which was called Reforma, which had the worst metallurgy, and they were able to get 45% recoveries in gold. So those are big improvements from what we're currently getting. The silver, same thing, they increased it by 200%, up to 80% recoveries of silver in the ore body they were mining, and up to 60% recoveries in silver in the most distal, most refractory ore body. So we're hoping that we can push this testing through second phase, and then with good results, design the technology, fund it, and get it put into the mill circuit and start really recovering precious metals. And if it works, that gives us a pathway to reprocess the existing tailings facility. And that has a lot of metal in it. It has both base metals and a lot of precious metals in it. So that could be a small mine in itself at a low cost. All we would need to do is do a little bit of a regrind on the tailings and run it through that system to recover. The other system that's been tested is the Albion process, and they had similar types of results. They got good results for recovering and increasing gold and precious metals, gold and silver recoveries out of the mine. So we're also just in the process of finalizing the delivery of a Jameson cell flotation pilot plant. And again, that's a pneumatic flotation to recover fine ground ore. So we want to test both of these systems to see which one works best. And if we get the pathway forward, then we're intending to convert the facility to microfine grind and pneumatic flotation. Obviously, we would probably still use some of the flotation circuits we have there, but it would all be designed based on the success of the testing that's underway and that we intend to complete. I think our target for this is the rest of this year. The testing will be underway. We should have the results by the end of this year. That should give us a pathway for engineering and look at implementing this technology next year into the mine.
Okay, and this is something I've talked to subscribers about. I don't want to embarrass Ralph by throwing too many numbers around that he can't respond to, but I ran the numbers based on I think it was 2013 leach ox and emaflot testing, and if they get those recoveries at a production scale, you're talking literally tens of millions added to annual cash flow. This isn't chump change. These are very large numbers if this stuff works. And in fact, it's part of the reason it was part of the investment thesis when I started following the stock and bought a big chunk of the last placement was this metallurgy as much as it was Tahuehueto. But you're also kind of getting pretty busy on the mining front here. You're opening up some of the, I mean, they're known areas, but they're areas that weren't accessible to you until now.
Yeah. I can jump into that. I mean, the screen's still visible. Just quickly, this shows the increase in production quarter by quarter on revenue. So Q2 was 16.2, and then ore process went down a little bit, but the revenue went up. And that's all in sustaining costs of 77 and C1 cash costs, which are project costs, all in project costs, 48 cents a pound. We've produced about 678,000 ounces of silver, out of the mine, and we've sold 672. So we lose a little bit of silver to the off taker, but we get the majority of it. And gold produced 33,000 ounces, 26 paid for. This silver production, if we continue to be able to produce as we are, we should be in the neighborhood of about 1.25 million ounces of silver this year that we'd be paid for from Campo Morado. So we're hoping we can continue to maintain. So let's jump into talk a little bit about where this mine is headed to in the future. So this is a good longitudinal section showing the various ore bodies that have been drilled and discovered so far. We believe there's a lot more here, by the way, but we're currently mining this El Largo zone. We're taking a little bit of material from Naranjo, where we've got access to it, and mixing it with the El Largo. And this ore body, we probably have about 8 months to 1 year left in the El Largo. We have to develop this Naranjo zone. That development will take 4 to 6 months. It'll probably cost us in the neighborhood of $4, $5, $6 million. But there's still a lot of ore down in this Southwest G9 area that was not mined in the previous owners. So we've been steadily dewatering the mine to get down here. Our water level is here at this point in time. We expect to have it fully dewatered before Christmas, so in the next several months. While we're here to talk about it, exploration potential, there's been some drill holes from underground and intersected massive sulfide ore bodies below. And there's some very good geophysical anomalies down here. So there's a lot of room to find more of these ore bodies below the existing mine. So we're going to go there when our finances get better and we have enough money to actually get out and do an extensive exploration program. So if we look again, let's go down a bit further. So next slide, this slide I'm going to show you next is down in this area here.
Okay.
And that is the G9 Southwest Zone dewatering. So we're currently at 800. This red line is where we are now. We're moving down. We've exposed one ore body here. It's got about 91,000 tons, very good grade, 5% zinc, 187 silver, 2 grams gold. So that's one area that is accessible now. Once we dewater the whole thing and we get back down here and start mining, well, obviously we're going to mine that. If we go further, we take the water level down fully dewatered, then there's several more ore bodies that are ready to mine. So for example, the Southwest, just over 500,000 tons, 3% zinc, 105 grams gold. This guy here, this is the one I just showed you. This one here, smaller is one, but there's approximately 814,000 tons available. And that's about 1 year plus of production available in this area. So that'll give us more time to develop the Naranjo zone, perfect the metallurgy there, and put the life of mine plan in to carry on and mine the Naranjo zone after this. There is an interesting possibility. There's an exploration target down here that has not been drilled very well at all from the previous operators. You can see it on a longitudinal section that goes through here with just a couple of pierce points, not very many. Our guys think that this could represent an undiscovered ore body, and they want to drill these holes. And if it's successful, there's potential for another 2 years of ore in this area. And these are the type of grades that we would be expecting. So 3.8 zinc. These are good grades, 3.5 grams gold and 191 silver. So obviously this is speculative.
Right.
It's an exploration target, but if it's successful, then we can extend the mining in this Southwest G9 area for another 2 years. So that would give us 3 years of production down there. And these are particularly high grades. This Southwest G9 zone was really the best ore bodies, had the best recoveries of all of the ore bodies discovered so far. So that's kind of where we're taking it. It's plan is
well,
there.
one thing that you mentioned, and you can see it in some of the resource numbers that on the previous slide, is this area has generally higher copper grades. You don't produce a copper con now, but you told me that you're going to be doing some work on that as well, either bringing up the copper to payable levels in one of the other cons, or maybe generating a copper con in addition to the zinc and lead ones you produce now.
That's correct. I mean, this Naranjo zone is a quite a rich copper ore body and gold ore body. It's actually zoned within its zone. I mean, the Naranjo zone
Right.
is actually zoned ore body as well. So there's an area there that has higher grade zinc, but there's an area there that has very good copper and very good gold numbers. So our testing is right now, metallurgical testing is designed around to produce a copper concentrate, and we're having some success on it. We've been able to produce about a 13% copper con. It's not a high grade con, but there's a lot of precious metal in that con, and our off-taker will buy down to 10% on copper. So we have our pathway for mining here, and the metallurgy for the higher grade coppers down here should allow us to start doing that as well.
I think that's, I mean, that's pretty good looking. I mean, obviously the metallurgical stuff is huge, but it's nice to hear that it's nice that you keep driving forward and you're going to be accessing some of these better grade zones. And just so everybody's clear, there's quite a bit of ore left here. There's a lot, like many VMS type mining situations, you're dealing with multiple ore bodies, multiple separate pods. In their totality, you've got, I don't know, 10 plus years, and there's a lot of stuff you kind of know is there that you haven't really drilled off yet as well.
Well, there's to comment on that. There's about 15 regional property scale targets from surface targets that need to be drilled. They're all developed by the previous owners, and they're high quality targets. They're geophysical, combined geophysics, some of them coincident geochemistry. Any one of those surface targets, if we drill them, could prove up new ore bodies. And then I showed you what's potentially underneath those ore bodies. So I'm pretty confident that we'll be able to bring in new ore bodies once we start exploration again on the project. And this could extend the life of this mine, or it could even allow us to increase the production rate. Maybe we could double the production rate if we can find new ore bodies that would justify that expansion.
Right. Okay. Now, how about Tahuehueto? How are things going there?
So Tahuehueto is going really well. We're on target. The budget, we're on budget. In fact, we're a little under budget at this point in time, but it's moving along really quickly, really nicely. I could walk you through a few pictures to give everybody a sense of what it is. So, okay, so this is the photo of, this is the mill. We're getting this area ready for the tailings filtration. I'll just carry on down, show you a few more. That's one of the pads for some of the tanks to support the project. Again, this is tubing for the water line coming up from the river. So that project is underway. We're clearing off an area here for storing stockpiled ore to stock up ore for the mill.
Right.
This is, again, the same type of slide. This is all preparation for storage. I mean, this project is fairly challenging for level topography, so we have to make
it's not too flat.
yeah, exactly. Again, these are bases for water tanks at the project. So I mean, you can see that everything's moving on. The project is being developed, built, the construction is underway. There's the mill. Again, here is the foundation for one of the ball mills. This ball mill should be installed over the next several weeks. The conditioning tanks, etc. here. It's all slowly coming together. A close-up picture of the foundation for the ball mill.
Okay.
Just part of the mill itself. There's the flotation tanks. They're all in place, getting things hooked up, getting it all ready to go. Same thing there. Crane over top to be able to replace equipment in the mill. This is the start of the tailings facility. They're starting to get it cleared out. We're going to do a few geotechnical holes down here, but we're getting ready to start building the dry stack tailings. This project is moving along rapidly, and we still believe that we will get this first ball mill turning before the end of this year. And the second ball mill would come online in the Q1 of next year. We hope to be having this project ramping up to 1,000-ton capacity late in Q1, early Q2. And then all going well, have it run, get all the bugs out of the mill, and potentially declare commercial production mid next year.
Okay. That's not too far off. I mean, you'll be pushing rock through the mill December or something like that. I mean,
That's the hope. Yeah, that's what we're targeting to do. So.
okay, and I believe you mentioned that you are working on or you get the engineers, whoever, working on an updated PEA for Tahuehueto?
A PFS. So
PFS,
we
okay,
published,
yeah.
our original PFS was published in 2017 using 1180 gold and low metal prices.
Right.
We are upgrading right now, and we hope to be able to deliver those numbers in September sometime, hopefully mid-September.
Okay.
And we would announce the economic numbers, and then 45 days later, we would be filing the new report. So it's well underway. And the good thing about that is we'll be using updated metal numbers. So we'll probably be using around $1,500 gold, a 3-year rolling average. And these should really improve the economics. So, let's keep our fingers crossed, and we'll be able to deliver it really soon.
Yeah, I mean, it looks like everything's going according to plan in terms of CapEx, so there shouldn't be any negative surprises there. I mean, all the surprises in the PFS should be on the positive side, because you're bringing the gold price up $300 plus, and probably silver up a few bucks an ounce. So I mean, I'm expecting pretty good numbers, which, fingers crossed, come in right around, maybe just ahead of MIF, so you can actually talk about those when you present on the 17th, hopefully.
That would be nice. Yeah, I hope to have them by then. I mean, we had good economic numbers at 1180 gold, so
Yeah.
it should still be pretty good. So we're pretty confident on that.
Okay, well, I think that covers everything. I mean, things have been going great, Ralph. I mean, they've improved so much at Campo, and that may just be the opening act. If this metallurgy works, you've got lots of room to make that one larger, lots of room for more recoveries. Tahuehueto looks like it's on schedule, it's under budget, so you'll be a 2-mine company next year. I mean,
Yep.
things are looking great. I think Altaley is a great story. I still consider it somewhat undiscovered by most of the market. You really have to sit down and crunch the numbers to appreciate how much potential improvement there is here in the next 12 months.
I think that the reason being is Campo Morado has been recognized as a tough mine, but we've done a pretty good job. We've got a really good operations team on there, and I got to take my hat off and congratulate all my team. They've done an incredibly good job on both projects, and these are really qualified, smart people, and we've got a good future ahead of us.
Sounds great. Altaley Mining, great story. You really want to be on this thing. I think it's a great growth story, and it's going to be throwing up great numbers, and it's not expensive based on the numbers they're already putting up. 3 cents a share for Q2. Looks pretty good. Thanks for coming by, Ralph.
Thanks, Eric. Really appreciate it, and thanks to all your listeners.